All right, greetings, fellow traders. Welcome once again. This is Michael Storm, also known as Robin Hood, and welcome to the Forex market update for January 6th, 2022. Welcome to Wacky 2022. I mean, it's going to be a wild year, no joke. And I'm sure we're going to see lots of wild movements. And what I'd like to do right now, talk with you about some silver and some gold. If you don't trade silver and gold, this will apply to other charts as well. I mean, we're basically traders of candlesticks and time frames, fear, greed, etc. Let me see if I can get this blown up on screen properly. Yeah, that pretty much fits. Okay, so let's talk about the journey between point A and point Z. All right. A journey of 1,000 miles starts with a single step, right? So if you're trying to get somewhere, sometimes you're going to get there, but in the Forex market, you don't really know how long it's going to take to get there. So what I'd like to do is just show you on this daily gold chart. Please ignore the background noises. I don't know how well my microphone is picking up. But I got a little puppy trying to jump all over my lap. So you might hear happy dog sounds or something like that going on in the background. Now, let me get a pip counter in here. I'm sorry, a day counter in here first so I can find out how many days this has been. 32. All right, so we have been looking at gold and silver in our trade room actually for the past multiple months. Is primarily a long. We want to buy. We want to be buyers. But we'd like to buy at price points that make sense. And then, of course, we want to gain. There comes a time, you have to sell what you've bought. You can't just hold on to it forever and, watch the pips evaporate. That's not a great idea. So what we're doing for all of these months, this really goes back quite a ways right now. We've been buying dips, holding on, trying to mix with as much patience as we possibly can muster. Sit down, you dog. And sometimes it'll fly up like crazy, and we'll tend to click out. And sometimes, we get out a little bit too soon. It'll continue to soar, but that's okay. We don't need to worry about bottoms. Like every trader book out there will ever tell you, you can't catch the bottom and you can't catch the top, but you're supposed to take a piece of meat out of the middle. So if you're a daily chart trader, of course, you're going to be looking for some pretty awesome locations on the charts to buy. And then you have to wait. And unfortunately, you don't know how long. Sorry about that. You don't know how long you've got to wait for. So for instance, buy the dips. Everybody may have heard this expression before, buy the dips and sell the rips. Here was an incredible dip that happened, way back in, I hope this is June. I can't really tell. I've got some dotted red and white lines crossing right through my dates, so it's not easy for me to see it. Is that June, July, August? I'm not sure. Anyway, a long time ago, we had radical dips. We want to buy this. Now, if you're trying to catch it, you may not get the bottom. I mean, you might end up purchasing and it goes lower. You have to buy a little bit more. You got to buy a little bit more. And you don't know exactly when it's going to stop, exactly when it's going to turn. But once you do, find that bottom and things are going up and away, the daily chart trader will tend to take their stop loss and, move it up. Move it up. As the days go by, as the candles go by, you just, keep on moving it up. At what point do you get eventually, stopped out, right, for a profit? This is a huge profit for sure. If you bought this on the daily chart and you held it for days on end, eventually you saw some stuff here and it worried you. And maybe it made a little sell signal and you're watching your pips evaporate and you're like, ouch, that hurts. I don't want to watch them all go back down again. So at some point, you might have stopped out for a gain. anyway, in every uptrend, there's always a little bit of a shakeout to try and shake the weak hands from a good trade. So you see here we have a beautiful bunch of candles going up, a nice pullback, more up moves, more pullbacks, more up, and of course more pullbacks before more up. It truly is a very disciplined trader that can handle psychologically that kind of activity, especially if you're on a daily chart and you're buying way down here and you're holding it through. You don't know if you're going to lose pips, right? And so can you deal with all of that and manage to hold, right? But nonetheless, even if you can, even if you psychologically can take it, at some point, you do have to get out. Where is that sell bar that comes in and eventually stops you out when it breaks a critical low? So we all know, at least we all should know, that we're trading candlesticks and fear and greed, and the candlesticks are the footprints of money, the price action in candlestick form, right? So if this was an hourly chart, for instance, I mean, I know way up here it says daily and you can see it. So, but if this was hourly, maybe it's easier to handle that than if it was daily. So anyway, that's what we've been looking at. That's what we've been doing. And yes, we are buyers, all these radical dips inside of this daily chart. We are looking for price points, candles, buy action, signals, whatever we can get, whether it be hourly, 15-minute, 4-hour. Everybody, has their own favorite, favorite time frame. So let's go a little bit more recently. We had this mega run here. It was a great dip where we had gotten long. Did we experience the entire journey up here? No. I obviously clicked out before then, somewhere up here. Didn't get the whole thing. And I was watching this for days on end, waiting and praying to the market gods, ready to go find a neighbor's cat, sacrifice the cat to the market gods. Don't take me seriously, please. I'm just kidding, making it up. I don't actually sacrifice cats, but I was praying that it would pull back so that I could get long again. I want something to crash and burn so I can buy. Now, where did we start? We got really hot and heavy for this thing long, way back here, right at that candle. When we pulled into this pile of moving averages that you see, we could take the time to put a fib in from here to here or from here to here, and you would see additional things. And of course, stochastics are a part of it. It was obviously buried and looked pretty good. There was demand over here, not supply like over here. You can probably see the supply there. But there was demand. So we wanted it. It's that simple. So on the daily chart for a long time, 32 days, we've been buyers. So what we've done is, hourly speaking, 4-hour speaking, etc., we've purchased every low we could get our hands on. And every time it rock and rolled up like mad, we're out. We're clicking out. And just because we're clicking out, it doesn't mean it's over. It doesn't mean the trade is like finished and we're completely done with it. No, because we go back to looking again for another fall and another place to buy. We keep, once we get a theme, we're going to put that theme in place for a long time until it tells us not to. All right, so in a minute, we're going to drop down into lower time frames. But before I do that, we bought here. It popped. We got out some. We repurchased. When it popped, we got out a little bit. We bought more. It popped. And every single time, we're just buying. And over here, we had quite a bit. We were pretty substantially long. When the gold market had shot way up here to previous high that we clearly saw and said, oh wow, that's resistance right there, and that's resistance right there, and that's resistance. Let me blow it up a little bigger if I can. How do we know that this was resistance? Well, prices shot up there and fell. They shot back up and fell. So somebody is like, forget it, I'm out. So this is definitely resistance because it's falling, right? And I'm going to blow it up even bigger. Look here. This is resistive because prices fell. So is this. All of these wicks are saying something, as you probably already know this. I'm not, I'm not like giving you prodigal enlightenment or anything like that, but you probably already know. All these days were very resistive because there were hourly sell bars and substantial pullbacks on the market, on the charts. Okay, so this is resistance like this is a little sloppy, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days, right? Until price burst above that, and then it wasn't really resistance anymore. See, so the pullbacks were purchased, higher moves. This was purchased too. So, once resistance gets broken to the upside and you pull back into it, will tend to become supportive. So I look at the candle bodies, support and resistance, in my humble opinion, okay, is not a hard and a concrete number, right? It's a slightly elastic, stretchy area. Okay, it's meant to be tested. I mean, maybe you could think about it like cartilage. Like bones are hard, right? And cartilage would be like squishy, right? It can move a little bit. So this here being resistive became supportive. We were buyers all of this low. And every time it shot up, we're out. Granted, we never really catch the bottom. Granted, we never really catch the top, but we're taking a huge slice of meat out of the middle. Now, we even continued to buy right here on this day when it tanked, but that was pretty scary because it was a very big and powerful daily sell bar that closed like very close to the bottom. So even though I purchased over here and had a nice up move, I did not experience this portion. I mean, I don't think I was long there. I took like half of it, but I did not take that half, and I'm pretty sure of that. Now this crash that happened over here, okay, this one, tended, I'm looking for the right words. It's been a long day, so pardon me. Tended to break that little support area right there and pull deeper into this right here. So it's got to be a little stretchy, a little elastic, right? Now, let me see if I can shoot over to a 4-hour and crunch this up a little so we can see it better. Now, each one of these candles, as you know, takes 4 hours to set up. And every other candle's another 4 hours. So it's really a long time. If I really crunch this up now from here, you're looking at 32 days. It's a tremendous amount of time. How many trades can you put on this in 32 days? I mean, I probably bought gold, I don't know, at least 2 to 4 times a day, pretty much. So we'll say 3 on average, maybe 3 times a day on average, times 30 trading days. So I've got to have about 90 trades right in here. 90 trades getting long. But we're talking about lower time frames, always dropping down to the lower. So right now, where gold is, and silver too, you can see this is not bad. This is not bad. This is not bad. Even the stochastics, which is a part of our puzzle, shows us Okay, we never want to buy over here at the top, and we never want to be shorting at the low over here. It just doesn't make any sense. We have extra stuff in place, like little SHI channels and different things. And you can even see what looks kind of like an A, B, C, D type of a move. I mean, it's not mathematically correct, but it's visually there. And so what we're doing now on both gold and silver is lightly scooping up these bottoms. But we haven't had a powerful up move yet. So if you are a 4-hour chart trader in conjunction with a daily chart, and you're a swing trader because of your job or business or career, whatever, and you don't have a ton of time to trade, aren't you trying to grab a hold of the bottom? Right? You want to buy low, sell high, correct? Buy low, sell high, buy the dips, sell the rips. So you see this incredible dip. Somebody, smart money, should be attempting to purchase this. But how long do you have to hold it for? And the journey between your entry, point A, to your exit, which we will call, for lack of a better term, we'll call that point Z. All right, you have a goal in mind, get long, take it back up here to the guppy, to the investor wave. 50% move, right? A lot of people really like that 50% area. Let me see if I can throw a fib in real quick. I'm not really there. Huh, my eyeballs deceived me. Look at that. Well, 50%'s a little higher, but okay. But there is a guppy wave in place, right? So that's pretty hard to get through. These bottoming tails, we know on a 1-hour chart, they were supportive for a little while, a brief period of time, hourly. They were supportive. But on this candle, no, they weren't. So it got smashed. So how long does it take to get from here back up here? What's the pip count? Looks like about 160 pips approximately from where we're trading right now. Who doesn't want 160 pips? Every trader wants 160 pips, right? But when you get long at point A and you're going to exit at point Z, what does the journey look like between where you enter and where you get out? That's the big question, see? Sometimes it just gets lit up like a Christmas tree. Green, green, green as can be. It just rock and rolls and you're like, wow, that was fantastic. Yeah, sure it was, because it was all really smooth sailing, really solid, and you didn't really have any problems. Other times you can see that there's a lot of chop and flop before you eventually take off. Sometimes there can be, a great 4-hour buy, then a wicked retracement where you're like, oh my goodness, all my pips are gone. I got long, it went up here, I have 117 pips, and now I've got 12. It just disappears, right? If you didn't get out quick enough. So the entry to the exit, the ETA, okay, estimated time of arrival, who knows? I don't know. I mean, it's not like hopping on a plane and it says, welcome to, gold flight number whatever. We're in the air now. We're sailing at 38,000 feet and we're going to arrive in our destination in 17 hours and 45 minutes. Enjoy the ride, You don't know that that's how it's going to go down. See? So when you drop into the lower time frames, there can be a lot of choppy, floppy, Christmas tree, red, green, price action, lots of moves that can happen. And scalpers, of course, those that are seated, at their charts, busy, active, watching, stalking, always waiting. As soon as it falls, boom, I'm buying it, right? Scalpers can grab a hold, like I actually did this right here. I remember purchasing right around here. It popped like crazy. I took it off, came back down, and I bought again, like right here. And guess what? I wasn't correct. I got smoked. It went down against me, 75 more pips, right? On the way down, I remember clearly, this is a 1 hour chart, lower time frames, I purchased a little more, purchased a little more, purchased a little more. When this all came up like that, I remember exiting a few, but I still have one right around here that is currently not a winner. It's not a winner. I'm negative at least 40, maybe 50 pips. I don't know right now. Could be negative 50. Okay, so I'm purchasing all those dips, and every time it pops, I'll be letting some go. The distance between your entry A, your initial entry, your baby slice that you put on, and you say, okay, I'm going to pay attention now. And your ultimate exit, you don't know what the journey, the roadmap is going to look like. I wish I had my drawing tool up right now. I was about to pause the video and go open it, but I see I'm at 20 minutes, so I kind of have to speed up here. I'm really not supposed to be going on this long. I don't want to bore you to tears. I know people's attention span can really wane out after 20 minutes, so bear with me. I'm going to try and finish and give you the rest, okay? So keep on dropping down on your time frames, 15-minute charts, right? 5-minute charts, 1-minute charts especially, right? Look at these. There are some really nice moves. Don't you want this? When you're in a good location on a daily or a 4-hour and you're like, my God, I need to get long. Don't you want incredible falls first so that you can purchase something? And then you get these, rapid pops, right? Here's one, 18. It's pretty decent. Well, that's actually not decent. I'm sorry. It's really not. The market is closed now, and we're not. I think we just entered. As I look at my clock, we have just entered into Asia, so it's pretty crappy time right now. But nonetheless, in the great scheme of things, don't you want these radical falls so that you can buy? So you get these nice pops, you can take some off, right? How does the journey look between the initial entry and the radical final end exit? And there can be quite a lot happening. So again, 32 days ago, we were buying, we were out. We were buying, we were out. We were buying, we were out. And our actual goal, our ultimate finished goal, was here. You can see a few days ago, we were close, but no cigar. We were about 150 pips away from our intended exit, which we never got. So we keep on purchasing, keep on waiting for the pops, and we keep bailing out. What does this roadmap look like before we ever get back up here again? Don't know. You really don't know how many days. You don't know how long it's going to take. Nobody knows. And the swing trader, I don't know, maybe mentally they can handle it to just, get long now, set the target there, walk away, and say, okay, well, whenever it gets there, it gets there. But I mean, what if it takes, I don't know, let's throw something crazy out. What if it takes 18 days to get there? You prepared to go long right now? Wait for 18 days in order to get your 500-ish pips, right? Forget about the, you see the pip counter, it says like 536. Forget about the 36, okay? Because you've got swap payment. So even if you make 536, you're probably only going to get 5 worth because some of it's going to be eaten up in swap. How long does it take to go from here to there? And what does the roadmap look like when it happens? God only knows. I mean, you could make 1,000,000 choppy, floppy up and down moves. We could just go all over creation until you land here. See? So anyway, that's the the key thing I wanted to talk about, I'll give you a really quick example if I can find it. Which one was it? Was it New Zealand, Canada? No. Was it Odd Canada? Yes, that's the one. Okay, here's the one that we were looking at in our trade room the other day. And we had noticed on a weekly chart, let me go there first, okay? Weekly. We noticed all these topping tails and these smackdowns. Topping tail, smackdown, topping tail, smack. And so we watched this for 1 week. We watched it for 2 weeks. I swear to God, I'm not kidding. We watched it for 3 weeks, coming all the way up to this trend line. And we were desirous to sell it short up there. But we wanted it to get there first. And the sad thing is, it took 3 weeks. So when we thought about going short, it was right here. We didn't wait for there. Just saying, we actually did not wait. I mean, that would have been great, now, right now, with our wonderful gift of hindsight, we can clearly see, oh yeah, that was the place we should have shorted. But try it when it's live and not Memorex. I mean, anybody can point to a chart. So this is 1, 2, 3, 4, 5, 6, 7. Okay, 7 days ago and 8 days ago. Now I can clearly see it, right? That would have been the great place to short. But guess what? We didn't. So we shorted 9, 10, 11, 12, 13 days ago over here. And look what we had to suffer and had to endure for all those days. Down moves? Yeah. Some small down moves. Very, very pathetic. 40 pips on a session? Pff, no way. You didn't get 40 pips on a session. On a session, maybe you got 20. Okay. So shorting, covering, and just kept doing it, right? And our goal was to get right back down here. So look at the initial move. Beauty. 140 pips. Really nice. And it's 140 pips in 3 days. But you got to be able to hold on. What does the journey look like? You're short over here. You're waiting all that time. Finally get the move. Finally it comes down. Hits our target. This was our intended target right there. Now, a few days ago, this very same trade, we were watching it in our trade room and waiting for it to bounce like mad. We wanted to see it get all the way back up to this, where this is. Because this says, hi, I'm support. How do we know? Well, price went up. Hi, I'm supportive. Price went up. I mean, it did. Hello, I'm supportive, and it still went up. And that was support, and that was support, and it just kept going up until this candle where it said, you're not support. Bam! Down it goes. It broke it. Broke it good and hard. Bounced. Sure. I mean, nothing moves in a straight line, so. Great downdraft. Great bounce to hook right back in. Another great downdraft, and there's the 3 days. There's the 100 and, from the absolute top, I think it was 150. 150. From the very top to the very bottom. Remember, you can't catch the top. You can't catch the bottom. You just have to do the best you can to take a slice out of the middle. We waited for this to come up here before we ever thought about shorting it again. You can see the direction was chosen, right? I mean, it's down. And this corrective move is just to shake out the weak hands so you can drop again, which is nice. So it kind of looks ABCD, right? 150, 130. So it's not mathematically correct, but it's visually right. It's 150 and 130. And you see this. Would you ever short this? I mean, do you wait for 15 days and then say, oh, I think I'll short it now? No. I mean, where's your stop loss going to be? Why on God's earth would we wait for 15 days and then short it? No. And have you ever known that to tell you to get short? No. No, this here is most likely a bouncer. So if we were to run a fib in, let me do that really quickly. You can see we're almost at the 618 level, completely buried stochastics. I got a SHI channel. I got a lot of demand back here. Why would I short the lows? It's stupid money, shorts lows. It'd be much better to be more long-minded here. Wait for it to pop like crazy, get back up here, and if we're going to find a short bar, we could find it someplace up here. But that takes a lot of time. It's a long wait. All right. Oh, I am so sorry. I just looked at the clock. I am at 30 minutes now, and boy, do I apologize. If you're still with me, check this out. Silver. This was all supportive. Well, it was resistive. Then it became supportive. Prices went up nicely, and then we ended up crashing through. Not so great. So that puts the squeeze on people, right? Anybody who's long is suffering right now. But nonetheless, me and my team are still buying dips. So we do have a couple, like when I say a couple, I mean 1, 2, 3 little tiny baby pieces down here, willing to collect more if we get a substantial price improvement. But if we don't get that substantial price improvement, we way down here into the lower fibs, we won't be adding, will we? We're waiting for it to shoot up. All right. Now, I think it was a couple weeks ago. I took a break. Sorry about that, but I took a break during Christmas and New Year's and didn't post any videos then. But the last time I chatted with you guys, I was going to tell you how to get some free gold and free silver. Now, it does take a little bit of work on your part, all right? So I'll just throw this out there real quick. If you're interested in it, if you don't have any gold and you don't have any silver and you want some, but you don't have a lot of money to be buying it, here's a way to do it that you can basically obtain this for free. Perhaps you've seen it on the internet, and perhaps you've seen the signs in your town or your state or your province or whatever. We buy gold and silver. Have you ever seen those ads on Craigslist or anywhere else? We buy gold and silver. If you choose to get into that kind of business, you can offer out to purchase gold and silver off of people, broken jewelry, broken necklaces, broken chains, whatever. There's a lot of people that just don't care. They literally don't care. They got a pile of scrap gold, pile of scrap silver, sterling, and they want to get rid of it, and it's garbage to them. And they've just saved it up for whatever, 5, 10, 15 years, and it's nothing to them. The buyers that buy the scrap gold, scrap silver, basically, they pay about 33% of what it's worth. So there's testing kits that you can purchase cheaply. You can meet people at a coffee shop, take a look at what they have, and you can test it to find out, is it 10 karat, 24 karat? What is it? What's the carats? Is it 18 karat, 14 karat? You have to make a determination. There's videos out there that will teach you that kind of stuff. And you could try your hand at it. You could literally offer people about 1/3 of what it's worth. So you bring a scale, you bring some weight. Bring some weight. You bring a scale, you bring your testing kit, you weigh it out, and you make an offer. And you hook up with a melter, and you send all that stuff in. They melt it down, tell you what's left at the end, and say, how do you want it? Do you want the ingot back? Do you want a check back? Do you want a gold coin back? How do you want your money? And if you do this enough times, right, you'll be buying $1,000 worth of gold or $1,000 worth of silver for, say, about $350. They do take a fee, by the way, for melting it down. So there is a small fee that you're going to have to pay them, of course. But you can make some decent money doing that. How do I know? Well, that's why everybody's doing it. There's so many people out there doing it. It's crazy. And it probably wouldn't take you more than maybe 5 or, at the most, 10 hours, spare hours in a whole week, or if you're not very lucky, just a couple of hours a week, right? Meet people, buy their gold, buy their silver, their cruddy stuff, melt it down, get your cash. Now, another way, I'll give you one more. This is a 2-for-1 Thursday. Another way is, and this I've seen in my hometown, at least I know it's in America. I don't know where you're listening to this from. But in America, there's a company called Clearinghouse Estate Sales, AuctionNinja.com, right? Auction Ninja. And, well, in my state, there can be anywhere from 2 to 12 auctions per day. All right? Somebody dies, they get sick, they go to an old folks home, a nursing home, whatever. Moving to Florida, whatever. Kids are selling the house. They inherited everything. They're selling everything off, right? And I see in those auctions tremendous amounts of silver going through. Sometimes it can be pretty attractive, and that's unfortunate because the attractive silver will tend to go for a higher premium. But occasionally you'll find ugly silver. It's silver, it's sterling, it has this much weight to it, and they'll list the weight. They'll say, this is how many troy ounces, and you know that sterling is about 87% silver, so you just break out your calculator and do the math. And for the most part, I'm seeing all of these items, especially the ugly ones, selling for about half of the price. But you do have a lot of competition. I mean, there are people out there, you're bidding on it, and you have to pay a buyer's premium as well for the auction, so you have to figure that in. I wish I saved some screenshots because there was one about 2 weeks ago. It was really nice. It was like a lot of weight. I forget the actual troy ounces, but when I broke out my calculator, I was like, holy cow. I could buy about $2,500 worth of silver, and I think the final bid was right around $1,000. So somebody paid $1,180, landed approximately $2,500 worth of silver. And the sad part is, I'm sure they mailed it off and melted it down. I mean, that is sad to destroy, work of art, but it wasn't pretty anyway. So you're after the troy ounces anyway. So that is a way to obtain silver and gold really cheaply, like way below cost. You could take the cash, you could turn around and buy the coins, right? Just whatever the cash is, and buy the coins. So there's a way, if you could put a little bit of time in, a little bit of creativity, slowly but surely over the course of a few years, whatever it may be, you could really substantially increase your silver and gold holdings. You might be happy with that in the future. You willing to spare a couple of hours a week here and there? A little bit of money? I mean, it's a little bit of capital outlay at first, but you're going to make it all back and more. So if you're doubling your money every time you purchase, melt it down, right? Use that cash to buy, to replace the money that you outlaid, and then the rest of it goes towards purchasing gold and silver. You could have quite a little business doing that. How much gold and silver do you think you could accumulate in a few years for a small amount of work? And one day, you might be a very happy camper. I mean, if silver ever blows up to 100, and if gold ever shoots up to 5,000, you'd be pretty happy that you took the time to do that work. Yes? Okay. All right, well, hey, my God, 38 minutes. Woo, I'm way overboard. All right, everybody have a great and fantastic trading week and a really great trading month. And if you like this video, please do us a favor and give us a like or a thumbs up or whatever that is. And if you did not like this video, smash it twice. I mean, really tell us. Hit that button 2 times. Double dislike us, okay? And if you are interested, we have a live trading room on screen. Hear it, see it. If you got 5 hours a day, we have the time to teach you. Not only that, we give you a course worth thousands and thousands of dollars if you'll watch it. It's about 100 hours worth of college level 1 and college level 2 trading. And I've been trading for, this is now 22 years, teaching folks for 12. And we had a great day today. I mean, it was really decent. It was like 1,000... 1,700 and something pips. I forget the actual number, but it was good. I posted it on Twitter if you care. You can check it out there. Give us a look-see if you're interested in that kind of stuff. And our website address is www.thefxmentor.com. Okay, www.thefxmentor.com. Everybody have a great trading week, and ask yourself this question: where are you going to be in a year? Is your account going to double, triple? Where are you going? If you need some help, give us a look up and we will help you. All right, have a great and blessed trading day, and we'll see you next week, same time. Be there or be square. Sorry about the length of the video. Thanks, guys.